For a look at some movers this morning, let's bring in Jenny Horne, co-host of Next Gen Investing. Hey there, Jenny. So let's start with Tesla, because shares of Tesla are higher despite the fact that the numbers were pretty downbeat. So Elon Musk said the right things on the earnings call.
He sure did. And I knew the minute I heard him saying that over the coming month that he's going to be pulling back from the, of course, DOGE initiatives, that this was going to be a clean move to the upside for Tesla. I will say that you make a great point. The numbers were not great. I mean, there was things of concern pretty heftily within the report, but he does expect that time allocation to drop pretty significantly, were his words, over the next month. So that's really apparently all we care about this morning. And I think that that has been such a huge drag on the stock. But you consider the fact that Tesla still had some weakness. I mean, they saw shares actually initially fractionally lower, now up pretty substantially this morning, missed both top and bottom line expectations for the first quarter, pulled their full year guidance, but again, did offer some assurances that the company remains on track for its more affordable models as well as the Cybercab. But I mean, 27 cents per share was the profit, well below what we saw a year ago on revenue that also declined about 9% year over year to $19.34 billion, also below consensus. Their automotive revenue was down 20%, while energy regeneration storage revenue, which has been their brightest spot, still was up about 67%, while services and other revenue was up about 15% on a year-over-year basis. But they attributed a huge decline in this profitability to the larger than anticipated decline in vehicle deliveries, increasing, as well as operating expenses, both of which were partially at least offset by some of their energy generation, as well as the lower costs associated now with the Cybertruck production in their first quarter. So gross margins actually narrowed 104 basis points to 16.3, but was better than estimates, which at the low end were around 12.7%. So that's something that's huge. Adjusted EBITDA also was down from a year ago, down about 17%. In terms of their balance sheet, we also know that cash from operating activities did swell by 791%, but was still down about 55% from last quarter, which is just crazy in itself. But I think there was still concerns, still uncertainty, definitely, but at least some clarity as far as Musk and these DOGE initiatives, which is something that I know Dan Ives, I know all of these various bulls. I mean, even those that are a bit more pessimistic on Tesla, like Morgan Stanley, they have been very, very transparent about the fact that we want Musk that is focused on Tesla. And that's, I hope, what we're going to see now over the coming weeks.
Yeah, I saw Dan Ives actually boosted his price target back on Tesla to $350 a share, saying leaving his DOGE role over the next month is the biggest and best possible news Tesla investors could have heard last night. Some of the brand damage will slowly go away, but importantly, Tesla got back its biggest asset, Musk. So just a reminder that it seems like if you're investing in Tesla shares, you're really investing in the CEO.
Yeah, and I love that take from Ives. I did not see that yet this morning, but because he's turned a different page. I mean, if you followed him over the weeks, it's not like he's been this uber bull we had known of Ives in the past quarters and years. I think it's been actually really refreshing to see him somewhat humbled by Musk and his lack of direction with the company. So now to hear him turn a bit more optimistic, I think is a huge sign of a win, because he has not been that way for several weeks now, Caroline.
Okay. Yeah. No, I mean, I was reading his note this morning, and I do think it's important to note, despite the fact that he's more bullish in terms of that price target, he did say that the brand damage caused by Musk in the White House and DOGE over the past few months isn't going to go away. They estimate that it caused future demand destruction of about 10% in the U.S., Europe, and Europe. So, certainly implications there still, but it seems like investors are clearly happy about what Elon Musk had to say, despite the fact that it was a miss on both the top and bottom line, and despite the fact that now growth is really, for the full year, is kind of called into question. Musk said that they'll revisit that full year guidance when they report second quarter results. So we'll have to wait and see there. Jenny, I know you also have your eyes set on Meta and Apple today after we learned about their fate in the EU today in terms of these charges, in terms of some antitrust. Fill us in there.
Yeah, what was expected to be a regulatory-friendly year has just not been that way for a lot of these Mag 7 names. Apple and Meta both being slapped with some pretty substantial fines by the EU in a move that could then it's being seen provoke, of course, President Trump. So he has previously threatened tariffs as potential retaliation for sanctions on these U.S. companies. Apple shares, though, still rising this morning, at least last I checked, and Meta also was climbing just shy of 5% this morning amid the broader market strength. But Apple received about 500 million euro, or about 571 million in US dollars in terms of penalties on Wednesday. Well, of course, Meta was fined roughly 200 million euro, both for breaches with the EU's Digital Markets Act, which is the wide-sweeping initiative, of course, overseas, which has led to a lot of the various lawsuits and fines we have seen. Actually, it also was a huge reason why we saw these USB-Cs implemented in most of our iPhones, or the newer iPhones. But Trump did say earlier this year he would consider tariffs again in response to these digital services, taxes, fines, etc. But the relatively small scale of the fines could help reduce the retaliatory action that's seen from the Trump administrations, as companies can be fined up to 10% of their worldwide revenue for violations of the EU Digital Markets Act, and penalties are levied well below the maximum right now. So Apple and Meta are required to, of course, comply with these decisions within 60 days. Otherwise, they risk the penalty payments. That's per the EU's commission. But the commission also says it continues to engage with Apple and Meta, and perhaps we could see some deal being worked out sooner than later. So I don't think these types of headlines typically move these massive companies to the extent that you'd think. I mean, yeah, you do hear 200 million euro. That's a lot of money, no doubt, but just relatively small, frankly, for how massive these companies, especially Apple, has really become over the last 5 years.
Yeah, so not necessarily something to move the stock, although Apple is higher today, or at least heading into the bell in about 15 minutes, despite the fact that it's also gotten a few price target cuts heading into earnings next week. I was taking a look. Goldman Sachs trimmed 256 from 259, so still a bullish rating and only $3 lower. But Wells Fargo cut to 245 from 275. UBS just lowered to 210 from 236, kept a neutral rating. So analysts definitely scaling back those price targets, and then those headlines don't seem to matter much to Apple shares today either.
No, and they really don't. And that's the thing about Apple. Apple actually has some of the most mixed conviction from the sell side as of late of all the Mag 7 names. I feel like we've seen analysts remain a bit more cautious on NVIDIA, you the wait and see. And then you have Meta, which has been actually one of our stronger names of the Mag 7, which is only down about 15% on the year. But Apple still gets the most, I'd say, criticism, and also maybe outside of Tesla, because Tesla still gets a lot of the bearish narrative. But Apple, there's been a lot of recent critics on Apple, but I tend to look at it as the same way I actually look at Tesla, where we see when the bulls start to pile in, they really pile in. When the bearish narrative takes over, it seems like it really takes over. Earnings will be the greatest sign of clarity, because typically I do feel like the street tends to go a bit more one direction. Either we go so negative or so positive. So I can't wait till we get those results and see the feeling on Apple, because to me that's a feeling on the overall market and the strength of the S&P 500 as well as the NASDAQ. So once we get more conviction on earnings, I'll be curious to see which way the sell side leans to, of course.
Yes, and I think it's important to note, despite the fact that it could be a magnificent day today for these 7 names, I mean, they're all down deep in negative territory year to date. Microsoft actually faring the best, down about 13% year to date heading into today's trading session. Tesla, of course, the worst, down more than 40%, but looking to regain some of those losses today. Jenny Horne, thanks so much.
Thanks, Caroline.